Alrighty, alright. Let's go ahead and get this stream on the roll. Thanks for everyone watching. Thanks for everyone tuning in today. We got quite the setup here. Before we get into the charts, we got some news here. In a few hours, the UAW is going to announce how many votes they have from their union membership to vote on strike authorization. Here, let's listen in for a sec.
President of the United Auto Workers Union is planning to announce results of the strike authorization votes in just a few hours.
And those results will show how many union members support a walkout if negotiations with the country's big three automakers continue to stall. Their current contract with General Motors, Ford, and Stellantis expires September 14th. Emily Finn has been following this story all week long for us and joins us live from Detroit. Emily, when should we expect those results to be announced today?
A few hours, right?
Hey, Marky, good morning to you. Yes, we are awaiting those results in just a matter of hours. We should have some more information here on the strike authorization vote to, as you mentioned, strike against the Detroit Big Three, Ford, GM, and Stellantis. And this morning, we're outside of a Stellantis assembly complex, which is just one of many plants that could be impacted by this potential strike. Union members telling us that it's looking pretty likely that this is going to be a widespread work stoppage. The union's president, Shawn Fain, will announce the results of the strike authorization vote today at 11 a.m. on Facebook Live. That is the plan that we are looking at here. Fain has been avidly using social media to rally support among union members and update them on negotiations with the Big Three so that they can reach an agreement for this new 4-year contract. He's connecting with them online, and
that's in about 3.5 hours from now.
Hosting a practice picketing event in Louisville, Kentucky. That'll be happening later today. The UAW's leadership was in Louisville yesterday as well, and in Detroit on Wednesday, we were at that event where we watched
union members really like this guy.
All dressed in red, the color for solidarity, marching around the block. They were chanting, holding signs, supporting their demands. We actually had a chance to speak one-on-one with the union's president, Shawn Fain, at that event. Take a look at what he had to say.
Oh, all right.
Record profits equal record contracts. You know, they've enjoyed a decade of high profits. The first 6 months of this year, they've recognized, again, $21 billion in profits, and our workers' wages have went backwards. There's no excuse for that.
Some of the union's demands include more than 40% pay raises for workers.
This is important to know.
Reinstating cost of living adjustments, ending tiered wage systems, and a 32-hour work week. Ford, General Motors, and Stellantis have all released statements on the negotiations, and they each assured that they have the best interests of UAW workers in mind. But if the strike is authorized, and the companies are not able to reach an agreement with the UAW before that current contract expires.
Listen to
that's
this.
Expected to happen on September 14th. It could cause more than $5 billion in economic losses. Some of the workers that we spoke with here in Detroit throughout the week said that supporting each other at this time is of the utmost importance.
Alrighty, so that... I am so surprised there aren't more people in financial media and in pop finance, you know, who aren't talking about the risks of this union actually striking, because this is the likelihood of it happening as every day goes by keeps going up and up and up. Let's see here, what else we got? We got Disney at 9-year lows. If I go here to Disney on the chart, and I'll hide real quick. And then we don't need that on the chart yet. Go to the day. Like, that is... that's horrible on the day. But when you go back far enough, this is April the quarter of April 14th, 2014. 9 years ago. Disney, what the hell? Like, Disney shares fell 3.9% on Thursday, closing at their lowest level in 9 years, with some investors betting that a further price drop is in the cards in the next few months. Oh lord, so this thing could be in the 70s or the 60s. Disney stockholders are scrutinizing the company's turnaround plan after Bob Iger earlier this month promised a mix of price hikes across its streaming properties, more ads, and cost cuts to lift the business. Ay. Man. Trading sentiment leaned towards bearish bets with put options that would guard against the stock slipping below 80 by mid-September and mid-October, and were among the most actively traded contracts. Oh, check this out. Put options convey the right to sell. Disney stock was also dragged by weakness in the broader market as investors turned cautious ahead of the U.S. Federal Reserve Chair Jerome Powell's speech later this week, which I believe is today. Real quick, if we go to Financial Juice here. Yep. So this is Powell's speech happening in about, a few hours from here. I don't think I'll be covering it here on this channel. I'll be in the Discord chat covering it live with you guys who are hanging out. It's pretty early in the morning, so my audience isn't huge, so there's no one here right now. But when everyone starts waking up on the East Coast, and when everyone starts waking up to listen to Powell, I'm gonna still be in here talking about and looking at the charts during Powell's speech. Alrighty, and then let's hop on back over here. And let's see here, what else is there? Some cliff notes. Oh yeah, this was a particularly good article out of Westpac. I want to just quickly go through. FYI, do not forget that the PMIs across the world came in like crap, especially in the Euro area. Yeah, and this is just a whole bunch of just saying, hey, you're now in contractionary territory for 13 months in a row. In the UK, you're in contractionary territory. Well, you're now at a 30-month low on PMI services in Europe. And let's see here in Japan. Japan's been holding up pretty well. Pretty well. They do have a comment here on the Bank of Japan. Employment continued to show promise, a constructive development for next year's spring wage negotiations, which the BOJ will keenly assess. Okay, so next year's spring wage negotiations is something that the BOJ is looking at. And for the U.S., things, the U.S. still got hit, but man, it's still better than, on a relative basis, than what other countries are getting. It's one of the reasons why the U.S. is a flight to safety, because when the world is doing bad, usually the best of the worst is going to be the U.S. And Japan might be more significantly a safe haven here, because Japan is actually holding up quite well. And then there's some stuff here on Australia. I'll go ahead and read through that some other time, but I want to get through these reports. And then from Seb, they had an outlook here talking about the US dollar's strength. I can show you here on the chart. they aren't talking about this over the last few quarters. They're talking about this over literally the last, few months here. So if I go to the day, this is the rebound that they're talking about here. And I could go ahead and hide that, make it nice and easy for you guys to see. Yeah, so let's see here. U.S. growth data have continued to surprise positively. Fed rate hikes are done. First cut in Q2 of 24. All right. Forwards are discounting around 100 basis points of cuts for 2024. And we think the Fed may deliver even more than that. I think most people are expecting 200 to 300 basis points of cuts when they do start cutting. And to anticipate those in like pretty rapid, succession. The people who actually know what they're doing, when it comes down to Fed rate hikes and rate cuts, the Fed usually when they begin to cut, it means that the economy is already doing terribly. Every major time the Fed has had to do a lot of rate cuts during an economic slowdown, usually the economy has gone into recession. The damage is being done at a significant pace, and the Fed is lagging, usually, to actually take any sort of significant action. So anyone who thinks that the Fed is going to be, quote-unquote, cutting on time, they might change their tune. There's a lot of people saying exactly that. But until they actually do it, the baseline expectation is that until the economy is actually hurting and is actually realizing those losses, that the Fed will be like a slowpoke turtle and won't do any sort of cutting until the recession is just obviously clear and people are obviously getting hurt and markets are down, and then the Fed steps in like, oh, we're going to come in and save the day. They have a very, very lagged response at times with this sort of stuff. Let's see here. USD rates, volatile autumn, downtrend in 24. Let's see here. ECB on hold. The outcome of the September meeting will to a large extent depend on new ECB staff projections. Let's see here. Forwards have declined to discount only an 8 basis points worth of hikes in September and a total of 14 in the autumn. We expect the first rate cut to also occur in mid-24 alongside the expectations for the Fed. Q3 of 23 is a window for dollar strength. We expect euro-dollar to continue lower in the third quarter here, in line with its seasonal pattern. And as the US dollar tends to trade stronger during times of risk aversion and or growth difference between the US and euro area, as well as China, because the euro area and China are net weaker on a relative basis to the United States, that will give a boon to the dollar side of FX pairs. Okay. And then here's some extra commentary on 210s and different spreads. FX hedges on treasuries. Low long yields limit the potential downside. Gotcha. Let's see here. Then they go into their rate cutting expectations in more depth. And here they go into more detail on their US dollar strengthening. I wonder if they actually have any sort of targets here. So let's see. Nope. And then here's their euro dollar seasonality. But their seasonality is only going back like 9 or 10 years. This is, every single year is a sample when you're doing seasonal statistics. So they only have 10 samples here. So if you want to say, hey, the seasonal economic conditions that have occurred over the last 10 years are very similar to the seasonal economic conditions of the current year, then by all means, this might be a decent assumption. But we are not in seasonal economic conditions. Like there's a lot of stuff going on here. But you can see August, very negative. September can be quite negative. And then they're also looking at an average. And an average will skew towards the larger numbers. So, yeah. But, nope, this is definitely, if you have seasonal expectations, that looks about right. Risk appetite deteriorating in August. Gotcha. Relative monetary policy compression, US versus Euro. Yeah, and they're looking at those 5-year real versus US 5-year. Oh, those are rate differentials. That's what this indicator is down here. When we look at the FX yield spreads on euro dollar, that's literally what this indicator is, and they're pointing out, hey, when you look at this thing here, this chart, and the gray lines on this chart, that's literally what this indicator is pointing out. Like, hey, yeah, your yield differentials are getting really, really, really poorly in favor. Well, they're going against euro, right? That's what all the red here means. The rate differentials are moving in favor of the US dollar. Okay, so we got quite a bit out of the way here. We got the UAW. We got that bit of information coming out today. I already said I'm not going to be covering Powell on the stream today. Just everyone's going to be covering it. You can watch someone else spend the time listening to Powell. I'm going to stick on Financial Jews, hang out with guys in the Discord, and chill. Disney had this article come out about it, and man, dude, the Disney... yeah, dude, we just got to take another look at that Disney chart one more time. Like, dude... Disney, come on, Disney. It's the worst reading since April, the quarter of April 2014. It is just horrid. And one more thing on the UAW stuff. These are the companies that are being impacted by the UAW strike. So that's GM right here, and you can see since they topped out back in July, around here is where the union strike stuff started getting rumors towards the end of July, and then here is when shit really hit the fan on the union strike. And you'll see August 10th, right? So August 10th, GM fell. August 10th, Stellantis fell massively, and then Ford also August 10th, right there. And Ford, yeah, and you can also see this is when the rumors started to come on in towards the end of July. Yeah, they all topped roughly around the same time. And it's still not looking great for these companies, considering that they're likely to actually go on strike. And check that out. NVIDIA pared back all of their gains. It opened at 502, came all the way back down. And now there's people coming out and saying, oh, this was all just false hype. Oh, this is, you can't just have one company carrying the economic growth of an entire country. That much is very, very true. And yeah, this definitely was overhype, a lot of bullish overhype for sure. Real quick, let's check out. Oh, wow. Yeah. NASDAQ got shat on. S&P also got shat on. This reminds me of the trade setup going into the PMIs on for all these US dollar pairs, right? Let me go ahead and run these by percent change. Man, the yens are doing pretty well this morning. Let's see here. For example, if I pull up euro dollar real quick, and I'll go ahead and hide the trade research so I can show you. I'll bring up a 2-hour chart. So ignore this stuff here because that's just those are all trades have been taken. Hide this. So right here on this bar, this is where we had the horrible Euro area PMI come out, and it's new lows, worst surprise since 2020. Literally, that was the last stream. Worst PMIs since 2020, and PMIs are a leading indicator of GDP. So when the flash PMI come out and they say, "Oh, shit's bad," well, the response was horrid. And then the US PMIs came out, but actually, I was trading with someone, we were looking at these charts, and I'm like, when those US PMIs come out in about 6 hours from now, that will give some relief to these dollar bullish moves that happened after this PMI, but I think it's going to get faded. My expectation for why that was, I mean, this is all in hindsight, but I got other people in the chat who can definitely verify this is exactly what I told them. That when you have a bunch of countries using a single currency, note that the countries that got hit the most, when you actually read the PMI for surveys for Europe, that was mostly France and Germany, especially Germany. But the European Union is a conglomerate of more than 20 countries. And the Euro area are countries within the European Union that actually have replaced their own currency with the European euro. So there's not every country in the Euro area had at the absolute worst performance out there and actually still remained pretty strong. So when the US had this little rebound, when their numbers came out, that gave all the other members that weren't Germany and France that came out with their bad PMIs to get a little bit of reprieve. And the truth is that those PMIs, even though for the United States, they came out a little bad, they were still way better on a relative and on an absolute level than what came out of Europe. So this was just an excuse to help out those countries. They had whatever trade that they need to get done, and then it got faded so hard, man. It got faded real hard. And then I went on Twitter and I looked at what some other guys were doing with their analysis on this, and I'm like, dude, it's a way simpler if you actually understand what it is you're actually trading and why certain economic events have the impact that they do. The more you learn about the world, the easier it'll be to find opportunities and risks. It's that simple and that obvious and that plain. So learn about the world. Okay. There is one more thing that is on the docket as far as news today, and that is Trump. So Trump had his mugshot taken. There it is. And now he's selling more merchandise of this mugshot than he is of the Make America Great Again hat. However, most people actually don't know that after that mugshot was taken, he had a speech.
Thank you very much for being here. I really believe this is a very sad day for America. This should never happen. If you challenge an election, you should be able to challenge an election. I thought the election was a rigged election, a stolen election, and I should have every right to do that. As you know, you have many people that you've been watching over the years do the same thing, whether it's Hillary Clinton or Stacey Abrams or many others. When you have that great freedom to challenge, you have to be able to, otherwise you're going to have very dishonest elections. What has taken place here is a travesty of justice. We did nothing wrong. I did nothing wrong. And everybody knows it. I've never had such support, and that goes with the other ones too. What they're doing is election interference. They're trying to interfere with an election. There's never been anything like it in our country before. This is their way of campaigning, and this is one instance, but you have 3 other instances. It's election interference. So I want to thank you for being here. We did nothing wrong at all, and we have every right, every single right, to challenge an election that we think is dishonest, that we think it's very dishonest. So thank you all very much, and I'll see you very soon. Thank you.
All right, that's that. But most people haven't seen that. Also, there is this bit of commentary on the mugshot that I thought was especially good. And then Razor Fist also did a video on the political ramifications of the mugshot. So these two videos, I'm not going to play here, but I highly recommend at least watching this one here. And if you want to watch these, you are absolutely hop on into the Discord and go to the announcements channel here, where I posted today's roundup of all these, literally everything that I've talked about today so far. Also some other stuff. We have new outlooks for the week ahead coming out. And we also have this fucking massive report out of Glassnode and ARK Invest talking about how they are redefining some of the on-chain analysis metrics that they're using so then they can be more accurate in their on-chain analysis. Like, this is, while yeah, sure, it's 128 pages, dude, I'm sure it's all going to be reading this, because these are the guys who effectively produce all of the on-chain analysis metrics. They are like the premier crypto data analytics company, Glassnode. So when they release a report like this, and when their head of research says, yeah, dude, this is a big deal, I'm gonna give them the benefit of the doubt and take it seriously and run through it. I've already read a good chunk of it, and I definitely like it. There's also some stuff here about the government out in Europe. Weston Nakamura's latest video is out. Peter Zeihan actually had some very good commentary that I agree with on the BRICS expansion. And then there's here are the videos down here at the bottom that will take you to those two Trump analysis mugshot videos. And there'll be more coming out, and I'll edit this announcement with any new stuff that comes out for the rest of the day. Yeah, and then once we're done here with the stream, I'll end the stage here for the daily plan, and I'll go into the trading room. Then after hanging out in there for a while, I'll hop into the trading group voice chat. If any of you guys are subscribed to the indicators that I make, so whenever you see me pull out indicators like this, range probabilities, it tells you your probability of finding a top or a bottom for a given day, week, or month. Then yeah, you'll be able to go through some trade plans with me there in that group voice chat. So right off the bat, let's go ahead and look at the biggest winners and the biggest losers of the day so far. Run this percent change one more time. Looks like France is doing especially well on the day today. Let's go ahead and check that out. Wow, not a whole lot of historical data on France, but they had a nice little pop today. The Euro 50, so the Euro stocks, also had a nice little pop, a little bit of a reprieve from yesterday's dump. And the DAX, right, the German 30, also seeing a bit of a reprieve. Looks very, very similar to the Euro stocks. The UK is actually chugging along here over the last week or so, doing very, very well, holding up very, very nicely. Probably going to see continuation from here. Let's go ahead and load this up. Yeah, I mean, that looks a little bit of a dangerous, buy on that month. Looking at it, though, on the week, yeah, top's probably in for the week here. Let's go ahead and check out Australia. Australia getting a nice little rebound back as well. Japan hasn't moved a whole lot today. Let's go on, and neither have the U.S. equity indices, and we already took a quick little look at that. Aussie yen has moved about 20 pips so far on the day, so not a whole lot of movement, but hit a likely top on the trading day. And look at that, hit a likely bottom for the day on the trading day too. There's your peak in your distribution for where you find most of your lows. On the Aussie New Zealand cross rate, it's probably topped out for the day here. And yeah, there you go. There's another peak in your distributions for finding your lows. I don't know if I would have caught that long there, but this happened in like the last 4 or 5 hours. If I was actually looking at trading Aussie New Zealand, I probably would have taken the time to look at this like 3 or 4 hours ago and crack on that short. Pound yen looks like it hit a likely low and a likely top on the day. I don't see any more movement here. Looks like the volatility is decreasing so far. When you look across the board here, other than the European equity indices, it looks like things are moving pretty damn sideways. You do have some continuation going on here for the day on WTI. WTI is just rocking and rolling right now. And there is a risk of further continuation for, I think, another 50 some odd cents, right? Something like this on the day. Yeah, that's about another somewhere between like 60, 70 cents potentially extra for the day. Go ahead and timestamp that for any sort of bullish continuation. So it's just, if you wanted to take your shot short, now would be the time. But considering energy prices probably are going to keep going higher, if you are a bullish continuation, that's the trade plan set up. Man, I would rather not see oil go higher. I like filling my gas up for a relatively small amount of money. And copper, Dr. Copper, did have a nice little bump up today. That looks like a much easier setup on the sell with this indicator here. I don't think it's gonna have the pop. But if it does have the pop, you would have a setup along probably these lines here. So that would be the entry, and that would be the exit, and that would be end of day continuation trade setup if that were to happen. We'll follow up on that next week. Remember, today is Friday. Today is the last show of the week, and we're at the 30-minute mark now. So I'd like to say thank you guys for watching so far. We're not done with the stream yet, but please leave a like and subscribe if you've been watching this far into the stream. And if you want to hang out with me, if you're watching this live or you're watching a recording of this a few hours after, come hop back into the Discord, come say hi, come check out some of the new things that I'll be posting over the rest of today and tomorrow. We have quite a lot of research that gets posted in here. Okie doke. And let's go ahead and check out the yields. The EU 10-year did see a pop here. So that will be a bit of a buffer to help the European euro and its currency exchange rates. Probably not against the on the euro yen side, because the next strongest move up has been in the Japanese yen 10-year. So if we go to euro yen, you can see how the exchange rate's moving sideways. That's where understanding how yield differentials impact currency prices can help make you a better trader. Okay. We can also check out XMR. XMR is on my shorthand of crypto watch lists. It's the only currency that's up on the day in dollar terms. Litecoin sideways, Bitcoin sideways. Hit a likely low for the day though. And same thing with Ethereum. So there's probably some upside move potential for like another $100 or $200 here on the day. All right, we just went through the entire watch list, and maybe I'll have some more individual equities in here. Actually, I should probably add Disney for shits and giggles so we can point and laugh at it. Oh, poor old Disney. Poor old Disney getting hit in the balls so damn hard. In the gender neutral balls, of course. Alrighty, you guys. I'll go ahead and say thank you so much for watching. I've been your boss, Joe Boss. I'll see you guys in the Discord. And have a lovely, lovely rest of your week. I will be back Monday. Leave a like. In a bit. See you guys in a bit.